Hi guys, this is a long iron fly trade example. Now, why are we choosing this stock CSCO? Because it's closing above the Bollinger Band. See, 33.37. So we know as it is going like above the Bollinger Bands, it will continue to go up. So we'll go to the trade and we are selecting 29th September as our ending date. Why? Because it should have a shorter date so that I can show you. Otherwise, it will be longer date and it will take more time to update the video for you to see. So that's why I'm selecting a shorter expiry period. But you can select according to your need. You can select shorter period or longer period, whichever you like. Now I've selected Iron Condor, whereas we are trading Iron Butterfly because Iron Butterfly example is not available in the buy sell column. So you select the Iron Condor and then you trade it according to your need. Example, you have to sell one put. The number one thing to note is they are putting in 10 option contract by default, but we are selecting one. Why? So that you can see it easily how the trade is going, because the more the number, you have to calculate them in your mind and it will be like a problem. So the lesser number will help you understand, and whatever the profit is, you can simply multiply it by 10, so you will know what the 10 options would mean for the profit or for the loss. So one option is an easy target. Now let's go to our sheet. As you can see, we need to sell one put. This is the sell one put. It should be the lowest price. Then we have two prices at buy put on call. These should be the same prices, and then we have to sell one call at the highest price. Now we are considering the price to go beyond 33. So we'll be selecting 33 as the top number. And 32.50 as the middle number. And 32 as the low number. So as you can see, we have put the highest number at 33. At 33, this call, we are selling it. Then the middle number is 32.50, put and call, and the lower number is 32, put. This is put. Now why are we doing this? Because if you go to chart, the top number is 33. If we don't choose 33, and let's presume we go beyond 33, then we have to go to 33.50, and that's not our likable number. We need a number to be lower than our price so that we have a profitability chance from day one. The next number we chose was 32.50. Why? Because we don't have any option in between. The next number that we chose was 32. Why? Because we don't have any option in between. So that's why we have selected these prices, because we know that the price will stay above 33, above the Bollinger Band. So we will always be selecting the other numbers just as a general number. Why? Because we know if it stays above 33, then we are always in profit. If it falls, then below 32 is always good. So that's not a bad period. The middle number can be selected anything, whichever you can find in like options. So it's up to you. Now this is it. We click confirm and send. So it shows the max profit as $5, max loss as $45, cost of trade this, and once you will click send, it will be traded. Now let's see how it goes. Thank you. Hi guys, today is the first working day, and as you can see, the price has moved up. So our aim was that the price should stay outside our top and lower prices, either from the top price, the top strike price, or from the lower strike price. We need the price to stay away. We don't want it to be directional. We want it to be directional. We don't want it to be non-directional. We don't want it to be flat or going straight. And as you can see, the first day have proven to be our day. See, It opened at this is the O for open, H for high, L for low, C for close. And this is the first day. It opened at 33.31. It hit the high at 33.84, hit the low at 33.20, and closed at 33.72. So basically, since yesterday, the yesterday close was 33.37, and today's close is 33.72. So 40 cents are added, approximately 1%. So we know it's moving up, and as it is moving up, and our price was, if you remember, lower. So as it is moving up, our price will be like left behind, and therefore on expiry we will have more peace of mind, because we know that if the price ends above or lower than the strike prices, then we are in profit. The best part. So currently the price is saying not to worry. You just have to enjoy the day. And that's why option techniques are really good, because they help you make money and they help you remove risk and enjoy the day. The best thing ever. And as you can see, it's moving in your favor. Thank you. Hi guys, this is day 2. Today is 27th September, so today after a few hours, day 3 will start. And as you can see, we traded on this day. The closing price on this day was 33.37. The next day it went to 33.72, and now it's at 33.76. So as you can see, it is moving up, and our higher strike level is left below. So we know we are in complete profit, and as it moves higher, our profit will increase with it. Now I have traded a weekly option, so only 3 working days are left. Within those 3 days, whatever you can generate, we will generate that profit and move out and book that profit. The best part, as you can see, the plan works. This is a live trade, so you can see everything is happening. It is moving up. First day, second day, and if you look at the highest high, it's 34.10. We traded at 33.37 close, and our level is even lower than this, the strike price. So we know we are in profit. We have no worry at all, and as it moves or more higher, our profit set to increase. Now it's a weekly option that we are trading currently, so we have a lesser time. In a monthly option, you have a higher time, so you have a higher opportunity to make money. But right now we have a lower opportunity to make money, but we are still making money, which makes this strategy a good strategy. Thank you. Hi guys, today is 29th September, early hours of Friday. Now, as you can see, our trade dipped one day and the next day it came back, but it's currently at the same closing price where we traded our strategy. But if you remember, we traded our strategy with strike price of 33, around here, right here, and the price is still at 33.35, and we have 1 day left. If it goes up, we get more profit. Otherwise, what will happen on Friday close? On Friday close, our 33 strike price will act as a buy option. You can simply buy from that 33 strike price and sell on the market at whatever the closing price on Friday is, and book a handsome profit. As easy as that. Now, as you can see, we have traded a really small time window. How? Because we have only traded with only 5 working days. 5 days in expiry. So it was 1, 2, 3, 4, and now Friday will be 5th. And on Friday close, it will expire. So our risk was only for 5 days. Now if you trade for 1 month expiry period, then you have a higher time to make profit. Now when I say a higher time to make profit, what I mean is the price is still going up from today onward. Today is 29th September 2017. So it is still going up. You can even look at this price through backtesting. In backtesting, you can see that the price rose up. Now, although I'm sitting on 29th September and I'm telling you that in October it will be rising, so you can see it at your terminal or whichever terminal you are using which have charts. So it will show you the back data which you can backtest it. So you can see if you have a 1 month expiry period, you have a higher chance to make good money. We had a smaller chance, but still we are in profit, which makes this strategy a good strategy. Because if on a shorter expiry period you can opt in for profits, that means that on a longer time frame it will be hugely popular. Because in a longer time frame, if the price is going up, as the Bollinger Band is still pointing up, then it will continue to go up. And as it goes up, then your rate of 33 will act as a buying, as a flying phase. From 33 till whatever point the price goes, that is your profit. If you look at it, the price in our scenario went to as high as 33.76. These are the open, high, low, close. Sorry, 33.76 is close. High was 34.10. So we know that it has huge potential. If on a shorter time period of 5 working days in expiry, we can have a 34.10 price high. That means a $1.10 high. And even in those 5 days, we are still in profit, which shows that the strategy has its worth. The only point is playing it correctly. We played it once the price went up, the Bollinger Band, and on this day, we traded our places. Now, as you can see, it has gone up. So we are still in the belief that it will go higher, higher, and higher. So at the end of the day, that's what we need in these option strategies. Thank you. Hi guys, our trade in Cisco systems, symbol CSCO, have expired or ended at 33.63. If you remember our trade or long iron fly, we sold one put at 32, we bought one put and call at 32.50, we sold one call at 33. We had a net debit of 45 cents that we paid up front. Now it's 33.63, right? If you add 33 with this loss, it comes to 33.45. That is 33 plus 45 cents. So it comes to 33.45 cents. The ending price is 33.63 minus 33.45. That is 33 and 33, this 45 cents added will come to 33.45. Once we deduct it from the closing price, we get 18 cents in profit. And that 18 cents multiplied by 100 shares means $18 in profit. Now why am I saying multiply it by 100 shares? Because one option contract is equal to 100 shares. Number one. Number two, why we deducted 33 and this 45 cents from the closing price? Because at the end of the day, on expiry, this call will act as your buy time period. And this 33 minus that the closing price, 33.63, would bring you a profit of 63 cents. That 63 cent minus this 45 cents paid up front means you get an initial profit of 18 cents. $18. And this shows that a stock with an expiry period of just 5 working days, just a week, can give you a profit of $18. And if you choose a higher expiry period, you can easily expand this profit, as we discussed in the past example. Number one. Number two, if you would have not traded one option contract, but you would have traded 10 option contract, then this $18 would have been multiplied by 10 to form $180 in profit. So it's simple mathematics. If you can make money on a shorter term, you can easily make money on a longer term. Why? Because shorter term is really fast. You don't know what will happen within those 5 working days. But in a longer term, you know that the price will go up. and you can make far more profit easily, far more easily than anyone can imagine. That's what matters. Thank you.